Don't keep your cash in the bank. 6 assets that are better and safer than cash. We all know that having some cash on hand for emergencies is important, but in the current financial conditions, relying entirely on the bank may not be the best course of action. Therefore, we'll look at 6 alternative assets in this video that can help you protect your wealth while also offering the chance for development and enhanced security. Stay with us until the end of the video to see which assets might be better options in keeping your money in a bank if you want to make your hard-earned money work harder for you. It's critical to weigh the advantages and disadvantages of keeping all your money in the bank in the fast-paced, unpredictably changing financial environment of today. Banks have traditionally been regarded as a secure place to keep money, but there are strong arguments against the idea that doing so is always the best course of action. The low rates of return on savings accounts are one of the biggest issues with keeping money in the bank. The rates on conventional savings accounts are frequently insufficient to keep up with inflation in the low interest rate climate of today. The overall rise in prices of goods and services over time, known as inflation, reduces the purchasing power of money. This implies that the value of your money will decline over time, resulting in reduction in your ability to buy things. For instance, your money's real value is declining at a net rate of 1.5% if inflation is 2% per year and your savings account is generating a 0.5% interest. As a result, what today could you buy for $100 in products may only be able to purchase you $98.50 in things in a year. Your long-term financial goals may considerably be impacted by this steady value erosion, particularly if you are saving for retirement or larger purchases. Additionally, banks may place restrictions on your ability to access your funds during periods of economic uncertainty or financial crisis. Although uncommon, similar occurrences have happened before, preventing people from getting access to their money when they most needed it. It can be very difficult to respond to emergencies or take advantage of investing opportunities when there is a lack of liquidity. What are the possibilities to take into account when trying to protect and increase your wealth? Your investments can be spread among a variety of investment vehicles, which can provide a more solid and dynamic strategy. You might be able to mitigate the effects of inflation and increase the security of your financial portfolio by looking into other assets. Here are 6 assets that are better and safer than keeping cash. Real estate. The best place for billionaires to hide their money has long been in real estate. After purchasing several residential properties for themselves, they began purchasing commercial properties such as hotels, stadiums, bridges, and office complexes. The renters often purchase the primary unit first, followed by the remaining flats. A lot of billionaires, including Larry Ellison, have large real estate holdings. Ellison has steadily made real estate investments in recent years, amassing a portfolio worth more than $1 billion. As soon as these billionaires decide to buy, real estate brokers will present bargains and simplify financing. Big investors put millions of dollars into real estate. This is not an investment you should rely on for cash flow, but rather a test investment for billionaires because real estate generates passive income and is an excellent long-term investment. Cryptocurrencies. To diversify their portfolios, Stephen Cohen and Ray Dalio have joined the cryptocurrency frenzy by investing their hard-earned cash in Bitcoin and other virtual currencies. Elon Musk, the richest man in the world, is familiar with Bitcoin, Ethereum, and Dogecoin. Since 2011, Bitcoin has increased by more than 20 million%, making it one of the most lucrative financial assets ever. Even while some billionaires such as Warren Buffett and James Dimon are unwilling to take such risk, you must be willing to do so if you want to succeed with cryptocurrencies. However, bear in mind that only a small portion of the richest people in the world participate in such markets with their wealth. Hedge funds and private equity, except for the extremely rich. Hedge and private equity funds are not for everyone. Contrarily, private equity funds are often invested by big organizations like pension funds or colleges. An organization or person can be a qualified investor, but they must adhere to specific rules. In other industries, public equity funds are subject to more regulation than private equity funds. If they are accredited investors, some extremely wealthy individuals participate in private equity. Hedge funds and private equity are not the same thing. Hedge funds pool money and employ a variety of methods to provide investors with higher returns. Fund managers put money into hedge funds because they think they'll offer better short-term returns. Equities and international stock funds. Even though a lot of billionaires invest in the stock market, it's important to remember that their lives are extremely different from ours. They can afford to take greater risk, which is one factor. It is doubtful that a 100% loss-making venture will jeopardize their future comfort or financial stability. They can take greater chances because they're so wealthy. A major company may be under the hands of extremely wealthy investors. Many billionaires, however, simply own a small number of stocks. Investors prefer index funds because they provide strong returns and don't need management. They are also varied and charge reasonable administrative fees. Billionaires are also drawn to stocks that offer dividends on passive income. Some investors prioritize earning current income above capital appreciation in addition to capital growth. Since 2004, Bill Gates has received almost $50 billion in dividends and stock earnings, including a $3.3 billion payment from Microsoft when he owned roughly 1% of the largest software firm in the world. Commodities. Commodities like gold, silver, mineral rights, or livestock, in addition to being stores of value, can offer inflation protection. The $1.4 billion fund was established earlier this year by Egyptian billionaire Naguib Sawiris to support his ongoing investments in gold mining and to look for new business prospects. He asserts that certain areas require consolidation. Aliko Dangote, the richest man in Africa, enjoys sugar, salt, oil, fertilizer, and packaged meals and is frequently exposed to cement. Cryptocurrency. In recent years, cryptocurrencies have attracted a lot of interest, and for good reason. Decentralization, security, and the possibility for substantial rewards are all features of digital currencies like Bitcoin and Ethereum. Although they have greater volatility and risk than traditional assets, they have grown significantly during the past 10 years. Before investing in cryptocurrencies, you should educate yourself because the market can be volatile. Cryptocurrencies can, nevertheless, be a helpful addition to a diverse investing portfolio for individuals who are willing to assume the risk. Peer-to-peer. Crowdfunding and peer-to-peer financing have developed as creative and accessible investment choices, giving people another chance to put their money to work. P2P lending platforms serve as middlemen, bringing together lenders eager to lend money and borrowers looking for money for various purposes. On these platforms, you have the option of lending money directly to people or small businesses and earning interest on your investment. The possibility of earning enticing returns is one of the main advantages of peer-to-peer lending. Borrowers can receive loans at low rates thanks to these platforms' elimination of traditional financial institutions as middlemen, while lenders can benefit from greater interest rates than traditional savings accounts. Investors seeking to diversify their portfolios outside of the stock market or real estate may find this win-win scenario to be an attractive proposition. Additionally, P2P lending enables you to assist people and small enterprises who might find it difficult to get financing from conventional banks. Crowdfunding. An innovative way to support various initiatives and enterprises is through crowdfunding. People can contribute money to creative concepts, artistic endeavors, or social issues by using crowdfunding services. Depending on the chosen crowdfunding approach, investors may get special benefits or even share in the project's success as compensation for their support. By empowering both creators and supporters, this democratic fundraising strategy fosters a sense of belonging and contagious enthusiasm while promoting business ventures and productive societal influence. The following 6 assets are better and safer than cash. Which of these choices appeals to you the most? Comment below with your thoughts and let us know. Give the video a thumbs up if you liked it, and don't forget to share it with your friends and family. Thank you so much for viewing.